my inspiration to get into property, because pretty much everyone needs an inspiration, they need a reason, was my father, to try and survive on one teacher's salary, so not much money. So the way that my father balanced the books was we would, as a family, buy a house, live in it. My father would refurbish it, sell it, and then we would go and buy another one. So by the time I was 7 years old, I was bigger than my mother, and I was helping my father to refurbish houses. So my property refurbishment career started at the age of 7, and I never stopped. For 1.75 million, I could buy somebody's life. So to hang one coat in Monaco cost me 10 grand. I don't want to sell my life for any price. You don't need money. You need mindset, you need education, you need a network.
Welcome to the Monegas podcast. It's a podcast about those who have built their empires, made fortunes, and completely changed the rules of the game. My name is Andrew Shem, and today's guest is someone who really inspires. Paul Smith, co-founder of Touchstone Education. Property investor, author, public speaker. Left home at 17 with just 170 pounds, now worth 100 million pounds. Monaco resident, mentored thousands of people in the UK and around the world to make money from property.
There's different versions of selling your life for money. And I don't know if that's a concept that most of your viewers were familiar with. And I'm most familiar with the UK, so if it's okay, I'll use that as an example, but I'm sure you can translate to whichever country you come from. In the UK, the average salary is £35,000 a year. And most people would work, they'll finish whatever education about the age of 20, and they'll probably work to about the age of 50. So if you work for 50 years and you're earning £35,000 a year, there's a mathematical test for everybody out there. I'm going to tell you how I do it in this little engine. I'm an engineer, by the way. So 35,000 times 100 is 3.5 million. 3.5 million divided by 2, so 100 to 50, is 1.75 million. So, scary thought. For 1.75 million, I could buy somebody's life in the UK, by which I mean they could work for me for 50 years. And I don't know if that's something you'd ever thought about, but I don't want to sell my life for any price, and without hopefully coming across in the wrong way. 1.75 million, I make that most months. And that is the price of the entire working life of a normal person in the UK. And the UK is the 6th richest economy on the planet. So for most economies, the amount that you could buy somebody's life for would be tiny. Annika, my wife, is Hungarian. Why is that relevant? Well, in Budapest, wages are not so different from the rest of Europe. But if you go into the countryside for 2 hours, which is where her home village is, it's unusual for people to earn more than about 500 euros a month. So 6,000 euros a year. 6,000 times 50. 300,000, that's like, people are selling their lives for 300,000.
Yeah,
it's crazy.
It's crazy. I agree with you. And you always mention
that's one property deal for me.
Exactly. So, and you always mention in all of your interviews that for you the most important is your freedom.
Yes.
Yes. That's why you moved to Monaco.
Yeah. Okay.
Or when you get your freedom, you move to Monaco, because we are speaking about the mindset. And Monaco is. They always say that Monaco is a land of ahead thinkers.
Yes.
And as we always speak with you, your network is your net worth.
Correct.
And what is Monaco for you? Why have you decided to relocate here? It's because of taxes or because of lifestyle? What is Monaco for you?
Okay, Monaco is fantastic for me. But if I could take that, the last thing you said, head on, taxes. People that maybe don't know me very well, or people that don't know Monaco very well, more importantly, say, oh, you just moved to Monaco to avoid taxes. No, I didn't. If I wanted to avoid taxes, and if I wanted to reduce my costs, then I would move to Dubai, or I would move to Antigua or Greece. Because I don't know if everybody knows this or not, you could move to Greece, which is very nice, Mediterranean, nice climate, nice culture, and you could do a deal with the government, not for me, special person pool, for anyone, and the maximum tax that you would pay in a year would be 100,000 euros. So I did not move to Monaco to avoid tax. And I've still got companies, well, I've got companies in Dubai, in Hungary, in Liechtenstein, in Monaco, in the UK, and they all pay millions in tax. I could easily reduce that tax bill if I wanted to, so tax is not the reason. I moved to Monaco for 3 reasons, from a social perspective, and 1 reason from a business perspective. And from a social perspective, I normally talk about the 3 C's. And the 3 C's for me are culture, climate, and cuisine. It's in the right time zone, it ticks all of those boxes. On Friday night, I was out in Italy for dinner. Italy is 10 kilometers away.
Yes.
On Saturday night, I was out in France on the beach for a dinner. France is 1 kilometer away. So from a cultural point of view, where else in the world could you go? Cuisine, well, I'll just leave it there before I cause an argument between the French and the Italians, that it is fantastic. And the climate for me, Dubai, for instance, it's too hot to live there half the year. The population cannot go outside, otherwise they will die half the year. So those are the social reasons. From a business reason, it's one simple thing, and you've already said it, it's my network. In many countries around the world, having wealth or being wealthy has got negative connotations. It certainly has in the UK. And if you've got a nice car, if you've got a nice watch, or if you live in a nice house, people will often say, drug dealer, or the implication is that you've done something wrong, or you're a nasty person, and that's the UK culture. You come to Monaco and the attitude is well done. They don't necessarily know what you've done, but they know you've done something exceptional, or you couldn't be in Monaco. And the key reason that we wanted to move to Monaco is if you want to have the biggest impact on the world, and I always say this, and you know me well enough, Andrew, it's not about the money, it's about the choices that money gives you. And if you want to be able to help the most people, the more money you've got, the more people you can help, in whatever way you want to do it. And I've got my own way, you'd have your own way. So if you want more wealth because you want to help more people, and you don't know anyone wealthier than you, you're stuck. You're making it up on your own, you're inventing things. And I always say that you need to be associating with people that are 2 steps ahead of you. So if you're a millionaire, you need to be hanging around with people that have got 10 million and plus. If you've got 10 million, you need somebody with 100 million. If you've got 100 million, you need somebody with billions. And in Monaco, I get that.
Yeah, just recently.
Easily.
Exactly. Just recently, there was a Formula One weekend.
Yes.
And I think from your apartment there was an incredible view of all these boats. I haven't seen this in Monaco previous years. Like no. I think this year was like the top of all the years, because there were so many boats.
Yeah.
And they said that the Monaco in 3 days, the Monaco itself made 1 billion in turnover.
Not surprised. But there is an irony, isn't there? Almost every country in the world has a big debt. How much debt has Monaco got? Nothing. Is Monaco high tax or low tax compared to most other countries? Well, for wealthy people, it's relatively low tax. And the Monaco government runs a big surplus. If you look at the accounts, if you look at the profit and loss for Monaco, it makes a lot of money because it understands how to do things like the Formula One. That's another thing I love, by the way. I'm an engineer, my first degree is in engineering, and I love performance. And if you look at something that combines machine performance and the performance of a person, So man and machine, if you want. Very sexist, I'm sorry ladies, but so person and machine, what better than Formula One? And in May, you mentioned the Monaco Formula One. I did spoil myself a bit. I went to the Miami Grand Prix early May, then I went to the Imola Grand Prix, obviously in Italy, and then the Monaco Grand Prix, so I actually went to 3 of them. That's a bit greedy,
yes,
even for me.
According to the assets in which you're investing right now, so what are your top 3
asset allocation
that you believe in?
Yeah, sure. So balanced portfolio. So when I'm teaching my students, I will teach them, and I genuinely absolutely believe this, that in English we have a saying that safe as houses. The property market is the foundation of everything. And to get your first 1, 2, 3, 4, 5 million, great, property. And I would say property until you've got, say, 5 million. Well, I'm not bothered if it's 4 or 6, but about 5. Then you should take, and it's critically important where you buy that property and what type of property. So I'm assuming that you haven't bought the wrong type of property in the wrong place. Just to give you a quick for instance, in the last 12 months, if I look at the UK, property values in London have gone up by less than 1%, so 0.75%. But property values in the areas where I invest at the moment in the UK, so the north of England, the northeast, the northwest, the northeast of England went up by 14% in the last year. So same amount of money in London, terrible rental yield and 0.75% capital yield. Where I invest, typical 20%, 14% capital, 6-7% rental. So be careful. So get yourself educated. So having done that, my next favourite asset class for somebody just, I suppose, at the beginning of their wealth journey will be gold, and not fiat currency. So for anyone that's not familiar with the term fiat, it just means issued by decree, so issued by a government. So whether that's US dollars, euros, pounds, whatever, all of those things are subject to inflation. And if you look at when the US came off the gold standard in the early 1970s, the purchasing power of the US dollar has declined by 97% since 1970, since the early 1970s. And an interesting way for me to look at the real value of money is to ask the question, well, 20 years ago, how many kilos of gold would it cost me to buy a house? And now, today, how many kilos of gold would it cost me to buy a house? And that really gives you a measure of how much money has gone down. So you've got 2 things going on. You've got property, gold, and other assets going up, and you've got the value of money coming down. And if I look at the UK, for instance, you would have needed, 20, 25 years ago, you would have needed about 16 kilos of gold to buy a house. Today, you need 4. So what's happened to the pound? And you could do the same in any currency. So property, number 1, because property goes up in value, but it also gives you income, it gives you rent. Gold maintains its value, doesn't give you any rent. Well, we could talk about that if you want. There are ways in which you can make money from gold. I don't do it because I don't like it, but you can do it. And for me, number 3, the asset class that everyone should be invested in is Bitcoin. And I don't mean that don't go and sell all your houses or sell all your gold or sell all your shares. But if there's any way in which you get to be what in cryptocurrency they call a whole coiner, if you could get yourself to 1 Bitcoin, I think you can pretty much relax for the rest of your life from a wealth perspective.
So you're crypto friendly?
I'm Bitcoin friendly.
Only Bitcoin, no other?
Only Bitcoin. Because without going too far into it, Andrew, because I don't think this is what this interview is about. Bitcoin is, for me, it replicates a lot of the functions digitally that gold does, but it's not technology based, it's scarcity based. So Ethereum was doing very well, but Solana's actually superior technology. And many people would be familiar with Moore's Law. Moore's Law says that computing power doubles every 18 months. So anything that you've got that's technology based is fundamentally obsolete. And if any proof is needed, everybody runs around with, not everybody, many people run around with an iPhone now. The equivalent of the iPhone, if I go back 20 years, because the iPhone I think was launched in 2007, 2008 roughly, so almost 20 years. The biggest phone brand at that time was Nokia. When was the last time you saw anyone with a Nokia? That was the number one phone in the world.
Yes.
And just before that, the BlackBerry. Most people under the age of 40 wouldn't even know what a BlackBerry is. Well, they will, they think it's a fruit. But, so those are gone. So technology is fundamentally dangerous. I love technology, but I don't like investing in it.
I know you invested in the company, actually in the bank, yes, the gold bank.
Yeah.
Can you tell a few words about this?
Yes. So you asked me for my top 3 asset classes, and I would suggest that anybody that's watching this would consider these 3. So property, investment property, gold, and Bitcoin. What you're now talking about is private equity. And because my operational businesses create a reasonable amount of profit, then I reinvest that profit into other companies that I really believe in. And one of those companies is a digital gold company where you can convert any currency into gold, obviously, but that's done in a way that your physical gold is yours. It's held by Brinks Mat in Zurich, so it's very, very secure. It's yours and whatever. And you can then use that with an online app. So I could send you gold to pay for something, or you could send it to me. But it's also linked to a MasterCard. So anywhere in the world that accepts MasterCard, you can just spend your gold. And if you want to buy a croissant in Costa Coffee or Starbucks, or if you want to buy a Lamborghini, do what you want. It's your money. And it's got many similarities. It's almost going the opposite way to what I just said about Bitcoin. It removes your reliance on any one state. And general observation from myself, when people become wealthy, when they become significantly wealthy, they'll generally have property, they'll generally have permission to live in one or more jurisdictions. So multiple passports, multiple residencies, simply because they don't want to be over-reliant on any one country. And don't scare anyone, or I'm not trying to scare anyone. But people will say, oh no, I can trust my country. Really? Well, I'm well read enough in history to know that if you go back to Sir Isaac Newton, many people would know Sir Isaac Newton for the laws of gravity and apples hitting him on the head and all of that stuff. Actually, he's a great scientist, but he's also the person that founded the Royal Mint, which in the UK is where all the money's made. So the mint doesn't mean anything to do with confectionery, it means the manufacturing of money. And the currency had got so debased in the UK that criminals, naughty people, would take silver. Most of the coinage was silver, and they would go and melt it down, and they would add lead and other things. So by the time Sir Isaac Newton came in, he said that, well, this silver isn't really silver. And this was about 1700. So he recalled all of the money to the Royal Mint. They melted it down and they turned it into real silver. And then they gave people money back. So you got your money back. But if you gave in 5 silver coins, how many coins do you think you got back? Any idea? 1. So your currency just got devalued overnight by 80%. And to give you a more recent example, when was it? Oh, you'll tell me out there if I get this wrong, I'm sure everybody. Round about 1990, the Berlin Wall came down. So East Berlin, West Berlin, East Germany, West Germany. And at that time, That was before the euro, believe it or not. Yes, there was a time before the euro, all you younger listeners. So the Germans used to have a Deutschmark and an Ostmark, so a German mark and an East mark. And the East Germans said, the West Germans said, well, the exchange rate between the Deutschmark and the Ostmark is like 7, 8, 9 to 1 or something. And the East Germans said, well, yes, but the reason we want to unify with you is because you've got a lot of money and you're going to bring us up to your living standards. And there was a political scandal that went on for 6 months or so. But the bottom line is, when they unified, the Deutschmark became the same value as the Ostmark, 1 for 1. So if you were in East Germany, hooray, you just got 8 times more money. If you're in West Germany, it's like, boo, I just got 7 times less money.
Yes.
So governments do this stuff, and people have got short memories. I'm going to get this wrong, I think it was 1932, the US was still on the gold standard, and the president at the time said, Roosevelt said, private individual citizens are not allowed to own gold. Did you know this?
No.
And in the 1930s, the American government recalled all of the private gold and took it off everyone. And you got some dollars back, but it was a fraction of what it was worth. And I don't want to go too political. So I've talked about the UK, and it's happened more than once in the UK. I've talked about Germany. I've talked about the USA. So if you're sat out there thinking, I can trust my government, how can I put this? Red pill, blue pill, which one do you want? So you crack on if you think you can trust your government. Sorry, I should use plain English, shouldn't I? Because I know many people. You continue in your misguided opinion. That's a rough translation of crack on in English. Even if you trust your current government, so let's go to the States, and let's say that you were a big fan of Biden, and you thought he was a fantastic guy and whatever, and suddenly you got Trump. Do you trust Trump? I don't think even Trump trusts Trump. Trump doesn't know what he's going to do. He doesn't know what he's going to do this afternoon, never mind in 5 years' time. So the nature of democracies is that everything changes. Every 4 years, every 5 years, or it can change. So,
but is it good or bad?
Well, Winston Churchill said that democracy is the least imperfect form of government.
Exactly.
And it's not great, but I'm not sure there's another one. But then as an individual, that's what countries do. But then as an individual, I've said this for a long, long time, far too many people worry about the world. And I don't mean in a, good versus bad. I just mean they worry about what's Trump going to do with tariffs, or what's he going to do with this, or what's he going to do with that. Well, you can't control that. The only thing you can control is not what the world does to you. You can't control that. You can control what you do to the world.
Exactly.
And so with Bitcoin, with gold, with companies, you can spread your risk between multiple jurisdictions. And with Bitcoin in particular, you can take it off grid, by which I mean it will be seriously difficult for any one individual government to work out where your assets are and what you've got. And that's not because I want to be difficult or avoid taxes or any of those things. It's just because I don't trust them. That's it. I don't trust them.
If you would need to start from the scratch, let's say in 2025,
yes,
having 10,000 pounds, what would it be and where would it be?
What would I do? Okay. Well, with my skill set, £10,000 would...
You can buy 1 square meter here in Monaco.
Yeah, I did a video on that. Upstairs, I've got a 1 square meter cloak cupboard, or coat cupboard, and it's 100,000, and I can fit 10 coats in it. So to hang 1 coat in Monaco cost me 10 grand. So I probably wouldn't do that if I just had 10,000. No, I would do this. I would go back to the UK, which I still could, because I've still got a UK passport. I would go back there. And I would use the 10,000 as a deposit to buy a house. And in the UK, it's very normal to have a 95% mortgage as long as you live in it. So I could then buy a house for 200,000. I would have to put down 5% deposit, which is 10,000, and I would then refurbish the house myself. I would work, I would get some money, I would just get the raw material, refurbish the house myself. And we do this most weeks. We buy a house for about probably 150 to 200,000, refurbish it for 30 or 40,000. So maybe we spend in total 200,000, and it's generally worth about 300,000 at the end. But because we do that through companies and we use contractors and we have to pay tax and all those things, if it was just me and I just had 10,000, I wouldn't have to pay any tax. So within about 6 months, my 10,000 would be 100,000.
Oh, so that's good to know. So for everyone who has 10 grand and UK passport,
Yeah.
and
or Irish.
or Irish passport, and of course the mentor is Paul Smith, you can make a lot of money.
Yeah. Well, yeah, all joking
So
aside.
to start in property, actually, you don't need millions, basically.
No.
You need just a little bit of money
Yeah.
and the right direction.
You don't need any money. You need the right mindset. So you were talking about the Monaco Formula One. So I'm very fortunate that I know a number of the drivers, I know a number of the managers and whatever. So when you've seen the Formula One, have you ever seen a nightclub, a pop-up nightclub called the Amber Lounge?
Of course, where all the drivers are.
Yeah, so that's the reason the drivers are there. That's Eddie, or used to be Eddie Irvine and Sonia Irvine. So that was what, I think it was probably Sonia that started it. I don't even know, maybe 20 years ago. And then what Amber Lounge does, for anyone that doesn't know, is it follows Formula One around the world. So pretty much whatever Formula One race you go to, there's a crazy after party, Friday, Saturday, Sunday, sometimes even the Monday in the Amber Lounge. Now, if you Andrew, wanted to start the Amber Lounge and you had the idea, why do you need any money? Because Sonia Irvine didn't go and buy a property. She rents the beach. And if you're selling tickets or you're promoting an event, when do you get the money? Well, you get the money when you sell the ticket. So could you sell the ticket for the Amber Lounge I did briefly look. A normal ticket for the Amber Lounge, I think, was 2,000-3,000 euros this year, and that would get you at a table, and so there's a minimum table spend and whatever. But the more expensive tickets were anything up to 20,000. The top end were even more than that. So I don't know. The Amber Lounge will have collected millions in Monaco. Yeah, I mean, this is more your area than mine, but would you?
Yes,
It's got to be millions, yeah?
Yes.
And then they rent the beach and they bring in some palm trees and they bring in a DJ and all that. But the costs of doing all that would be after you've already got your money in. So how much money would you need to set up the Amber Lounge? Well, nothing, in my head. And the Irvines, I think last year, sold the Amber Lounge. That was a private sale, and I wouldn't want to embarrass them anyway. So I don't know how much they sold it for, but they sold it to a major entertainment group. But it wasn't for single-figure millions. It would have been for tens or hundreds of millions. So a business that they started for nothing, a pop-up nightclub business, which is property fundamentally, they've sold for, I don't know, a huge amount of money. And many people would be familiar with hotel brands like Marriott, if I try and use international brands. I was a director of Whitbread in the UK, and we had the Marriott franchise, and we had some of the franchises from other groups, but we also owned some hotels as well. So we had many Marriott hotels in the UK, and we didn't own any of them. We rented them off of landlords. So to make money in property, you don't need money. You need mindset, you need education, you need a network. And the most important by far is not money, it's mindset.